It's time for part 4 of the Disciplined Trader mini-series here on Stonkcast. Welcome back. If you haven't already, check out parts 1, 2, and 3 that we already put out. But today, we are going over risk and reward. Very important topic. Also, keep in mind here on Stonkcast, we drop market prep videos that come out Sunday evening, 7 p.m. Eastern, and a midweek market check-in that drops every Thursday, 8 a.m. Eastern sharp. And with that, folks, don't forget to like, subscribe, and follow wherever you listen to podcasts. Now, let's get into it.
No, Frieza! Don't do it! Go!
You're watching Stonkcast.
Welcome back to Stonkcast, the market show for the average Joe, whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor. We've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Welcome back, folks, to the Disciplined Trader mini-series here on Stonkcast. This has been it's really a 5-part series. We are on part 4 now. We've been dropping a piece of this every week. Very excited for what we're going to get into today. So let's jump right into it. And as a reminder, also, if you haven't already, make sure to go out and get a copy of The Disciplined Trader. This is an amazing, amazing book. If you are serious about being a trader, really highlights the disciplined approach that you need to succeed in the market. So, again, written by Mark Douglas. He also wrote Trading in the Zone, which is also another fantastic book. But The Disciplined Trader, excellent, excellent. You can get it on Audible if you prefer an audio copy, or obviously you can get a physical copy, but highly recommend it. So let's get into it. So today's episode, Redefining Risk and Reward, The Disciplined Trader, part 4. And the big question here, do you trust your process? Maybe more importantly, do you have a process, right? So are you just going out there into the market and just hitting the buy button, hitting the sell button based off of a 2-minute chart, 1-minute chart, something going up or down? That's not really a process. That is more of an impulsive decision, right? Do you have a process that you can actually trust? Do you have an edge, right? That's what we're talking about today. So most traders think confidence means being right. But what if it's something else entirely? So most people believe that it's all about being right. And this kind of goes back to previous episodes. We've talked about the certainty that we have in our society. You know, the way you go to work every day is the same. You do this, you get that. If then scenarios play out each and every single day for us, whether it be at work or school, it's literally the way our society is structured. Whereas in the market, things are up and down, all over the place, fluid. They're not static. They're constantly changing, right? It's an entirely different environment. And unfortunately, we come into the market because of the way society is and the way we've been raised up, thinking that we have to be right. And it's just not always going to be that way. So confidence does not come from being right. You're going to see a lot of people, whether it be on YouTube or Discord or anywhere that, you know, various traders are promoting their services, talking about, oh, you know, I have a 90% win rate, 80% win rate. That, you know, that just kind of highlights the point here. Most traders think that confidence means being right, but it's something else entirely, right? The market is always right. Great quote here from Mark Douglas, straight out of The Disciplined Trader. It's the only thing that's always right. I love the classic quote, something to the effect of, the market can remain irrational longer than you can remain solvent, which is essentially just saying that, you know, you can assume that you have the right idea about which direction the market is going to go, but the market can remain irrational longer than you can hold on to your money. So Here's the core idea. Real confidence equals trust in process. So prediction-based confidence is fragile. What do I mean by that? So if you are relying on your ability, your intuition to predict which direction the market is going to go, that, my friend, is fragile. The reason it's fragile is because the market consists of millions and millions of participants with their own ideas. And even though, when it comes to trading psychology, fear and greed, yes, on a grand scheme, some of those components are predictable to a certain degree. That being said, however, things can change in a moment in the market, and therefore solely relying, I should say, on prediction is a poor basis for your confidence. It's fragile. Process-based confidence, however, is repeatable. It's what we can actually control. I can't control what the market is going to do. What I can control is my own process as a trader, my own playbook, my own trading plan, right? That's what I can have confidence in, is my ability to have that. First of all, know that I have an edge, whether I back tested it or whatever. But then maybe more importantly, even the fact that I know with a high level of confidence that I'm going to rinse and repeat. Internal consistency beats external perfection. I want to say that again. Internal consistency beats external perfection. So again, just kind of highlighting what I just said, but if you are consistent, you can have confidence in that, right? When I say consistent, I don't mean consistent in winning. I mean consistent with your internal process, with your ability to execute your plan regardless of the outcome. That, by and large, is going to beat any external perfection. You can have 10 wins in a row. Doesn't necessarily mean you made the right decision. You could have broken your rules, right? A lot of things could have happened that made that trade go the right way, and then maybe you get a false sense of confidence thinking, hey, I got this thing figured out. In reality, we need to focus on our process. Internal consistency is going to beat those external situations, nuances, right? And another great quote here from Mark Douglas: the market is always right. And again, that's just, I guess I doubled that one up. That is a typo, but you know what? It's so good. Let's throw it back in there. The market is always right. All right. So Mark Douglas, perfectionism trap. All right. So perfectionism equals paralysis. If you are focused solely on being perfect in the market, you're going to have paralysis. You're going to be frozen because it's not obtainable. No, even the best trader in the market isn't winning 100% of the time. You have to be nimble. You have to be able to adapt to situations. You can have a trade on, news hits the wire, you have to adapt. You have to be able to be fluid, not static, be able to respond quickly to what the market is showing you. And here's another great quote by Mark Douglas. I promise it's not the same as the last one. You can either let the market make you or break you. It is your choice. It's very true. So the market will break you if you focus too heavily on being perfect. I can't tell you how many times I've tried to kind of force my own idea on the market despite getting other signals, things that have come through, and I've learned some hard lessons that way, right? I consider it paying tuition to the market. Whereas you can be in a position where you let the market make you if instead of focusing on perfection, you're focusing on your decision making. And that includes, of course, your edge, but it also includes your exit strategy, right? It includes, not risking more than a set amount. That way, when a trade does go against you, you're more concerned about your process and getting out where you need to get out versus, being right. If you're so concerned about being right and a trade is going against you, it's going to be that much harder to let go of it because it becomes personal at that point. And when it becomes personal, that's when you're in a position where you're hoping it's going to reverse and go in your favor. You end up losing double, triple what you planned on losing for that particular trade. So again, perfectionism equals paralysis. So what is a quote unquote win? What does a win actually look like? We've already established that we can't be perfect, right? Perfectionism equals paralysis. So what does a win look like for us as traders in the market? So following your system equals reward. So following your system equals reward. This is so important because a lot of people they might replace system with being right. So being right equals reward, and that's just not the case. But subconsciously, that is the way we lean, again, due to a lot of the way that we've been raised up in society. It's very different from the market, but we have to follow your system. So in order to have a system, you need rules, right? You need to know what you're looking at. Is your entry level on a 5-minute chart a 30-minute chart? Are you looking at mean reversion trades? Are you looking at momentum trades? Are you looking at continuation trades? Are you trading earnings, right? These are all the questions, and many, many more, a vast number of questions that make up a system, that make up a playbook, that make up an edge or a system, right? That's what you have to figure out. And then once you have that in place, you have to, find a way to backtest it, figure out if it's actually going to work or not. You could do something as simple as support and resistance, some kind of a trading plan for that. Maybe you test it out for 20 trades with, fake money, a paper trading account, and see if it's profitable or not, something like that. But following your system is going to be what equals reward. Trusting a red trade equals strength. What do I mean by this? I mean that when you have a red trade within your system, you're trusting that this is a one-off scenario. This is part of the probabilities. You're not going to have 100% winners, right? You're going to have some losers. It's part of the process, and you're trusting that. If you're able to look at a red trade from your system, from your trading plan, and not get emotional over it, but understand, hey, look, I followed the system. It didn't work out this time. Moving on. That equals strength. The opposite of that, weakness, would be looking at a red trade, getting pissed off, assuming there's something wrong with you. Now, all those things may apply if you broke your trading system, but if you're following your trading system and you have a red trade, you need to learn to accept that and understand that that's part of the game. You can look at any other field. You could look at gambling. You could look at poker players, right? There's a lot of comparisons you can make there. They don't win every hand, and they don't take not winning a hand as something personal, right? It's part of the system. They understand that. And so similar for us when it comes to trading, we have to be able to trust our system. Letting go of outcome attachment. So this is a big one. A lot of new traders especially get caught up on the P&L, right? Oh, I'm up $50, $100. I'm down $100 today. We need to detach from the outcome. Really what we need to do, again, is just trust our system, follow our system, and try as best as we can to detach from the outcome. I feel like when you are overly attached to the outcome of your trade, you end up having your identity kind of mesh with it, right? And what I mean by that is if you have a bunch of losing trades, you start to feel like a failure. If you have a bunch of winning trades on the other side of that, you start to feel like the best thing ever, right? And that can just be a dangerous path to go down. We don't want to intermingle, right? Those two things. So letting go of outcome attachment. Another great quote here from Mark Douglas, straight out of The Disciplined Trader. You create your experience of the market. So true. You create your experience, meaning you put together the plan. No one tells you what to trade. You determine what to trade. You're the one hitting the buy button, the sell button. You create your experience of the market. And so if you want to create a positive experience of the market, you need to have guardrails. You need to have a framework. You need to have rules and plans in place, if then statements, right? If this happens, I will do this, that type of thing. A good example, if Tesla, gaps up in the morning and holds above a certain level, I will look to get long. If it breaks down below and it's past 10 a.m., I will look to get short. You need if-then scenarios. So how to build internal consistency. So how do we build this? We definitely need it in order to have a chance of succeeding in the market. We need consistency, of course. So how do we build that internal consistency? Part of it is journal your execution, not just your P&L. So again, we don't want to focus entirely on the P&L. Yes, we do this to make money, but it's not the end all be all. A lot of times, from what I've heard from a lot of successful traders, if you focus on the process, the P&L will come, right? A lot of people skip the process and focus entirely on the P&L. So journal your execution, not just P&L. There's a lot of ways you can do this. You can do it manually via Excel format, or I personally use an amazing tool called Edgewonk. It is a trading journal, and it has a ton of custom filters where I can add in various things related to behavior. Hey, when I got in this trade, was I bored? Was I on tilt? It's an amazing journal. Really, you just need a trading journal, whatever that looks like. I'm a big fan of trading journals. I think they're very important. So being able to journal your execution over time, you will see correlations. You will notice 9 times out of 10, if I'm bored and it's the middle of the day where there's no volume really being done and I'm just frustrated that I lost a trade in the morning and I put something on, 9 times out of 10, it's going to be a loser. And even if it's not a loser and it is a winner, it just kind of reinforces a bad habit for me personally as a trader. I found I don't trade that well between the hours of 11 a.m. and 2 p.m. I try to avoid that time slot. It's a lot of chop in the market unless there's some nuanced headline that drops. There's not a lot going on there. It's better for me to avoid that instead of getting chopped up. And that insight came from my journaling process. Another point here, grade yourself on discipline. And this is something else you can do in a trading journal. Grade yourself on discipline. Again, not just simply P&L. P&L will come and go, but are you being disciplined? If I can't overemphasize this enough, if you are not disciplined, you will not succeed. It's that simple, period. If you do not develop the discipline in the markets, you will not succeed. And then lastly here, focus on doing the right thing, not the perfect thing, right? We've already established that perfectionism equals paralysis. So you want to focus on doing the right thing. What is the right thing? Well, the right thing is whatever your system tells you, right? If you're coming up to your stop loss, the right thing is getting out at your stop loss, not holding on for another couple minutes thinking, well, it seems a bit oversold. I think it'll bounce here. Let me just see. Let me just try it out. Trusting your system, making sure that you're doing the right thing, in turn gives you confidence. You're not going to have confidence to trust yourself if you don't do the right thing being following your system. So that's what we got for this week. Kind of a shorter episode here on risk and reward, but a very important one. If anything, what I want you to take away is just very simply, you need to focus on your system. Don't focus on P&L. Don't focus on quote unquote being right, having a high win percentage. There's a lot of traders out there that have a low win rate. I'm talking 30%-ish. And they are able, because of the structure of their system, to be insanely profitable, right? So you have to figure out what works for you. But at the end of the day, you have to be disciplined, which leads me into my next slide here. Next week's episode, the 5th and final week of the Disciplined Trader mini-series, Becoming a Disciplined Trader. We will wrap everything over the past 4 weeks all together next week for the 5th and final episode of this installment here. Drop a comment. Let me know if you have a trading journal, if you have something different that when it comes to a trading journal that maybe some people haven't heard of. Drop it in the comment for others. Let them know what your experience with it is. let me know what your struggles are when it comes to, planning a trade or having impulsive trades, right? These are all things that we all struggle with. And I think the biggest takeaway for me with Stonkcast and this channel is having a community where we can come together, talk about our struggles, and also talk about our wins. That way we can all win and grow together. That's really what's most important for me, quite frankly. So I appreciate the support, and drop a comment also for another mini series that you want covered. Thinking about doing one on options trading, so that might be interesting. But if you got something else, let me know, and we'll take a look at it. But again, thanks as always. We will be back Sunday evening for the market prep video. We got a lot to cover with the Iran-Israel conflict still going on. What's President Trump going to do? We got a lot to dig into, folks, so it's going to be jam-packed. Hope you're looking forward to that. Make sure to share with a friend. Make sure to like, subscribe, and follow wherever you listen to podcasts. And folks, remember, plan the trade and trade the plan. Have a good one.